What is chop and why is it so dangerous? Chop is a term you've probably heard, and if you haven't heard it, you're going to hear it as you continue your trading career. So chop or choppy is a word that's used to describe price action that is difficult to trade. And chop can be defined by the following characteristics. Number one, the price stays within a tight trading range, or the price fails to make a new high or new low when it has the potential to make one. And lastly, a new high or low gets made, but the price immediately comes back into its trading range. In other words, there's no follow through. What annoys me about choppy price action personally is it requires that I be very precise with my entries and exits. The analogy I like to use for describing chop is coloring in a coloring book. When price action is choppy, you cannot color outside the lines and get away with it. This means smaller profit windows and means that you better be very disciplined when it comes to cutting your losses. Earlier this week, Thursday and Friday, September 3rd and 4th, Netflix provided a great example of what chop looks like. We have all the characteristics here. So this is a 5-minute chart of Netflix from Thursday, September 3rd, 2015. And you can see that the stock opened up right around 103 here. And the first thing we see is you make a low right here and you end up making a new low, right? Around 1015 or so. But then immediately you come back into the range, okay? And you bounce. So we try to make a new low. There was no follow through. It comes right back up. So it chopped anybody who was looking for downside off of that new low. Then our high was right around 103.50. We end up making a new high. And so now there's the potential for upside follow through. But nope, Netflix comes right back down into its trading range, failing to show any follow through that new high. And basically what you could do is you could take the high from the first candle, this first 5-minute candle, and you can take the low from that first 5-minute candle, and you can see that pretty much without exception, Netflix stayed in this range all day long. So the price traded in a very tight range. It failed to show continuation when it tried to make a new high or a new low. And then later on in the day, when it had the potential to make a new low, it was not able to do so and continue lower. That is choppy price action 101. All right, that makes it very hard if you're trying to get a breakout or a breakdown in Netflix on this day. Really not much you can do. So then let's take a look at Friday's price action. Again, a 5-minute chart. And Friday was even worse. Friday, September 4th, 2015. Netflix opened around 98 bucks, immediately makes a new high, goes higher, but there is no continuation. She comes right back down, okay? And now she's approaching her low right around 1030 or so. Has potential to make a new low, does not take that chance though, and fails to keep going down. Instead, she bounces right back up. And in fact, she ends up making a new high, Netflix does. But what happens at this new high right here? Well, we make a new high and immediately come right back into the trading range. And then try to come back up to that high here around 11:30, 12 o'clock, and again comes back down. Then later in the afternoon, Netflix approaches the low again, but instead of breaking down, which it had every chance to do if it wanted, it rebounds and comes back up. So another day where you can just kind of take that range, this time from the first 10 minutes of the day, and literally Netflix just stayed in this range the entire day. Just no movement out of the range, and that's what chop looks like. We go back up to our characteristic. The price stays within a tight range. The price fails to make a new high or a new low when one is approached. A new high or low gets made, but the price immediately comes back into that trading range. Another thing I would add is that the range from the first 10 minutes of the day ends up being the majority of the range on the entire day. So again, pointed that out here, where if you just take this range looking at Thursday, first 10 minutes of the day, you had this type of range get established. That ends up being your range the entire day. That was on Thursday. And then you saw the same thing, even more so, on Friday, where your range from the first 10 minutes of the day ends up being your range from the entire day. And the problem with that is you just can't trade any momentum. There's no direction. It just stays in a channel. It is choppy price action. And for someone like me who trades options, you look at this 5-minute chart here of the at the money 98 strike on Netflix. All right, this is a 5-minute chart of the at the money 98 strike on Netflix from Friday. Okay, so the top is the 98 strike put and the bottom is the 98 strike call. In theory, with options, we generally think one strike is going to go up. Either the call is going to go up or the put is going to go up because the stock's going to do something. Well, when you get choppy price action, both of these go down due to theta, vega, and other factors that affect options. So on a day like Friday, if you see Netflix gapping down and you're maybe looking for downside, you just had no movement in these options, even with the gap down. You could see they opened around 120 and traded between 160. Sure, you can try and trade this. You can try and buy this 98 put and sell it at, buy it at 120 and sell it at 150, a couple times. But again, it gets back to that analogy of coloring in between the lines. If you're doing that, you better be damn sure that you're nailing this entry and nailing the exit exactly right, because if you're not, look what's going to happen. That option went from $1.20 down to 60 cents within a matter of 20 minutes. Hey, you're down 50%. Have fun with that. So you say, okay, well, I'll trade calls instead. All right, well, again, here you go. You had a wider range in the calls. They were more volatile, but you better be nailing this. All right, I only see one really good trade here, or above average trade, and that was if you were buying the dead low on Netflix. You better have been buying the dead low. You could have got the 98 call from about $1.40 all the way up to $2.20. So a very nice return. But again, this concept of being precise, needing to be exactly right with your entries, because you saw this first move of the day in these 98 strike calls where they went up from 140 up to $2.40, but you better have been selling that, because if you didn't, look how quickly they came right back down to $1.40. So it's just complicated. It's not easy to trade this. I don't think so anyway. And then the thing to really notice is look at what happened to both of these after 11 o'clock right here. All right, so here's 11 o'clock on. Both of these went lower. Doesn't matter what Netflix did. Both of these ended up going lower from 11 o'clock on. And that's the difficulty of trying to trade options when the underlying stock is trading in a very choppy manner. So what are the solutions for trading chop? Well, first of all, you should always reduce your size. And I think in general, most people increase their size to compensate for the fact that percentage gains are likely to be smaller in a choppy environment. So their solution is, hey, I better increase my principal so that my smaller percentage gain is still going to translate to the normal profit that I would make with a bigger percentage gain on a smaller principal. This rarely works out well, I can tell you from experience. That's how I blew up an account. Once I realized to stop doing this, I've been able to trade choppy action much better. The second option, become a channel trader. Chop tends to stay in a channel. So if you can identify the channel, you can simply buy the low end and sell the high end. If we go back up to Netflix on Thursday, for instance, we talked about that channel that got established within the first 10 minutes of the day. Granted, it wasn't a very wide channel, but you still have, multiple trades here, one long trade here, then a second trade here on the short side, then a third trade here on the short side, and then a fourth trade here on the long side. Never really quite got back up to that channel. All right, so become a channel trader. You say, all right, I'm not going to look for momentum. I'm going to look to trade the channel. I'm going to buy the low end down here, and I'm going to short the high end up here. Other solutions. Reduce your hold time and your profit target. Waiting for the move during chop will make you go crazy. Trying to convince yourself that the chop is going to turn into a breakout or a breakdown, just don't do it. Wait for the choppy price action to resolve itself, and in the meantime, aim for smaller percentage gains and quicker in and out time frames. The other option, and I've been doing this a lot lately, is trade stock instead of options. Buying options doesn't work well in a choppy environment due to theta, vega, and other factors, but stock will not be affected by those same factors. You think about, in this example, comparing the 98 strike put and the 98 strike call, what they both did after 11 o'clock, how neither of these did well, and they both lost value throughout the day. Well, if you were trading stock, you didn't need to worry about that. You could have still just traded Netflix in this channel from Friday between 97.50 and about 99, and hey, it's not going to be big gains, but we already talked about you reduce your profit expectations and your hold times, and you just trade the stock within that channel. The other option, step away. There's no rule that says you have to trade every single day. If you don't like trading chop, then simply step away and wait for it to resolve itself. And lastly, the best option, something I do a lot of, sell premium. Chop is your best friend if you're a premium seller because of this right here. If you sell both of these options in Netflix, you look at this after 11 o'clock again, just harping on this fact a little bit more, the 98 strike put went from about 80 cents down to a penny, and the 98 strike call went from about $1.80 down to $1. So you had gains, you were positive on both of these if you sold premium. So premium selling is something that everybody should look to understand, as it is very useful in a choppy market environment. So that's what chop looks like. Again, Netflix, great example on Thursday, September 3rd, and Friday, September 4th, showed you exactly what choppy price action looks like. I'm sure there were a lot of other stocks that had the same thing, but do not get chopped up. When you see price action like this developing, then hey, you need to use one of those solutions. You either got to step away or adjust how you're going to trade it. And the way you see it developing is usually you should be able to get a new high or a new low that gets sustained in that direction within the first hour of the day. If the first hour of the day goes by, and this is the first hour of the day outlined right here, and you are still within that initial 10-minute trading range, then that is a bad sign on the stock, and you're probably looking at a lot of chop for the rest of the day. So be careful out there. Anytime you see choppy action, be aware.